Hey guys, what is going on? So just checking out the YouTube live, is it working? And I think we're live. Just double checking everything. Yeah, brilliant, cool. All right, good stuff. So yeah, essentially I wanted to do a quick one today just because I've got about 30 minutes as I'm in full routine and I've got other things I need to do. So essentially there was a Euro USD position that I was looking at today. This was more of a refined entry. I think the optimal entry would have really been where the 15-minute was closing, but this was pretty much the line in the sand for me. So as the morning started, what I was looking at over here was this value over here, and this is where I started doing my forecast when price started moving up around about there. At that point there, I was more inclined to potentially see London session if we came back down into this area, and if we did for London session open, which we did, I would be looking to buy to go back to the upside. So the nice thing about this is we did get that, and I was able to tie in my session with my entry and get that volatility coming to the market. So we moved away, and then I was able to get optimal entry. So that was a really nice little tweak to what I did there. So really happy with that sort of trade. So that's the first trade that I've taken. It's currently running for just over 1%, last time I checked it. So that's pretty good. So we're running around about 1.24. Optimal should be up around about 3% to the high. So that's good. So you did not enter. No, I did enter. I did enter the position here. So I entered it a bit more refined, and I was looking at it on the 5 as well. And I kind of just wanted to wait and see how this was gonna move. But ultimately I was happy with the protection because 10 pips, you can see how it lays me all the way down here. So even with that little bit of a decline, I wasn't really put off with that because I understood that even at this point here, when we started showing a bit of indecision in that area, even though it's on the 5, I was more than happy to wait for price to kind of make a push back up. So during this area here, it was stalling and it was over there. And then I was happy to make the decision with 10 pips based on the stop protection being down here. Really and truly, it made sense because of the time. It was literally about 15 minutes to the close and open of London session. So with all of that in mind, I was kind of more on the side of, do you know what, I'm happy to get positioned within this area now, and moving into the session open, likelihood is we either get an insurance entry or we go, and I was happy with taking that risk. So it was one where I think, looking back at the data, you know, sometimes this works in your favor, sometimes it doesn't. Definitely waiting for the closes on things does work more in your favor. Had I waited for this entry here, I would have pretty much been in the same. I'd be running roughly about 1% at this point anyway. So I was happy with getting protection a little bit tighter there. And now with being in this area here, I can move to break even and just let it be. So we'll have to wait and see how that one shapes up. Yes, happy week, BB. And another one, this is what I had on watch. So how I've split it up with my routine now is I basically got London session, New York session. So I've got my top 6, my additional pairs, whatever I might just put in daily watch, so I just leave it in there. But the primary focus for today is my London session pairs, and then after the London session, which will be 12 o'clock for me, I will be, which is an hour from now, I'll be reviewing my London session and then preparing myself for New York session later. So let's just go through what I've got on watch today. So I've got Euro USD here, which is amazing. Obviously we're already moving, which is great. So that's running in profit. We've got silver. Silver's a nice one as well. It's just, it needs a bit of time. With this corrective move down, it's nice because it's kind of showing that this could be the middle section for it to come back up. If it doesn't come back up today, that's fine. I was hoping for maybe a more optimistic sort of push up and then a sell. So that was basically the side of, if it was to go in London session, we'd get a strong push up and then probably store around here, New York session, get a sell. Now it's looking like it's either going to be a New York session trade. I'm not too sure about Asian session. I'm going to look at the data, and the data is not really showing me that Asian session commitment is really the one. So I'm going to be waiting for London session tomorrow, most likely, or New York session today, to potentially get back into these areas and then just wait accordingly. Aussie CAD is another trade that I was looking at. This one was one which as well I did shadow, and it would have accounted into a loss. Now, what I was looking at on here was, as you can see, as we were saying, we've got the value area here. We opened above and then we just rejected to the downside. As we rejected to the downside, we then got an insurance entry here after heavy body momentum. So this was more of a gap fill play where I was looking to play this to then fill the gap. So it is more on the higher end of risk, but something that I was happy with taking. So even you can see on the 1 hour, we did wash out there. We took it out and then we came back in, and then we had a heavy body rejection candle. At that point there, we started to pull back up, and then I looked at it on the 15 and I thought I missed the trade at this point. I thought, you know, with the candle being there, this would have been the trade that I would have taken right there, but I missed it. So then that was the trade there where it came back up. It was kind of around about 50% borderline, and I was like, you know what, I'll play that for the loss and the potential gap fill for a 3-to-1. I'm completely for that, and then if it sells off and continues. So yeah, Brian, you can text me on Discord, but I'll be honest with you, I've got a lot of Discord messages, so it's a weird one because I've joined a lot of servers over the time, like different prop firm servers. I just wanted to do my background research, and I get a lot of messages on Discord. If you use Instagram would be perfect if you drop me a message. I'll be honest with you, I'm more active on Instagram than I am on Discord with the messages. I kind of only use Discord to kind of jump on video chats and stuff with other people, so bear that in mind. So this was a loss. This would have been a loss, major loss right here. Aussie CAD still would be a loss that at first I was like, maybe, but after I review it, I'll get back to you guys on it. But I definitely think it was a loss worth taking, just given the trade idea in total. You know, we've been ranging between this area. If it was going to fail, it would have failed here. If it was going to commit, then it would have committed, and this would have been it really. And then we would have been able to play it to the bottom of the range. So at the end of the day, I'm not really mad with this type of trade. I think this trade is one which is worth taking a risk on. So we've got New Zealand CAD as well. New Zealand CAD, I was waiting for it to kind of come back up and tap into these areas and sell off. It didn't quite do it. So if I then go to the 15-minute, you can then see closely around about here, pre-London, we were moving to the upside. Arguably, we could say that if we pattern separate it, you had this, which was one piece of its own, and a bit of consolidation there, and then it came up, scooped, took out the liquidity here, and then it sold off. So, and then it tapped into low. So that's basically what actually happened really. And then in terms of pattern separation, that was one piece of its own, that was one piece of its own, and that was the leg to the downside, and now it's just retracing. So I'm not really mad with this trade. I'm quite happy with it overall. I think I'm happy to have just let it go. You know, I was looking for price to come up here, come down, give me that level of entry there, and I would have got in and then basically play that to the downside. We didn't get it. It is what it is. So looking at the last one, so I've got S&P 500, obviously it's just very bullish. I'm monitoring this for ETF purposes, and then I've got the DXY, which in lieu with the Euro USD, when the DXY does come into these areas, I will be a little bit more aggressive with my management on Euro USD. Main reason being is, even though we have something like this going on, this can still spike and come to the downside. So we don't want to be unnecessarily aggressive, but also we need to understand that this can still come down and push back up. And then next thing you know, it's a part of that. And it was always on its way back up. And then we should have pivoted here and we should have gone long. So kind of just looking at that, that's not really the best trading scenario, but I'm aware that if we were to get a sharp pullback for any reason, this would be the area here. So I would want to be more aggressive, knowing that previously when we've come into this area, we bought, but we're failing now. You can see we're topping off. We're failing to come back to the highs. So for that reason, this could have the potential to just sell off majorly, but equally, it can still top off. It can equally just come back into these areas. That becomes the middle section. That's section 1. This is section 2. And then we don't have a third section. It just becomes overall 2-touch, larger pattern to go to the upside. So that's basically it. And then if I do go into the last one, which is, well, not the last one, but I've got New Zealand US dollar, which I'm pretty much anticipating for a New York session trade. I would ideally want to see this on the 4. Right now it's a bit of a difficult one because we are trading through all of this. We would want to see it come back down here before we really see any sort of entry. So I'm not too fixated on New Zealand US dollar. However, Aussie US dollar on the other hand, you know, we are in the same territory. So a good retrace over here could actually be the 4-hour play with a large stop. But then if we get that insurance entry right there, that would be the more refined entry, which I'd be looking for. And then boom, and let's take it to the downside. So again, it's a lot of it is DXY dependent. If the DXY is going to continue going short right now, we're going to see Aussie US dollar and New Zealand US dollar go higher. And the question is, if it does go higher, where is it going to go? Most likely it's going to go to that next port of call. But it doesn't really matter because it has done significantly enough at this point for it to kind of be in the area of interest for the shorts. So we'll have to wait and see how that shapes up. And then I've got GJ over here. So GJ, again, it's so close now, borderline coming back up here. I'm more interested to see if price comes back and taps into these areas at this point. But there could still be some little level of a short play in play here where price comes back down into those areas. So when I'm looking at it, I'm looking at it on the hourly, and then I'm thinking, okay, well, we know that predominantly we're most likely going to move to the upside, but before we get there, could we be within this range here? And then if we're in this range, how can I get involved to take a trade into here to go long if I wanted to? And then I can go down to the 15 minute and evaluate this closer. And right now what we can see here is it is shaping up. I think this is going to be more of a trickier one to trade because of this particular reason here. We're on this low here. We've kind of got this section here. It's accumulating there. This isn't your typical middle section. So with all those wicks in place, I don't know if I really want to touch that. So that's one of the reasons why I didn't put it on watch as well. But this wasn't forming when I was looking at it, but now it is. I think personally, if this shapes up and it does that, it's a risk. It's higher risk for sure because it's on the low, but into that low would still make sense, but it doesn't necessarily need to get there because when you look at it from a pattern separation perspective, first top, second top, third top, bottom, near miss, broke the low, it's gone up now. This is the continuation, and then this just goes. So I wouldn't be surprised if we don't get this coming back and revisiting the low, we actually just end up going from where we are. And it goes. So again, GJ's not really given us the best sort of confirmation in the sense of positioning, but in terms of trade thesis and trade idea, the long definitely seems a lot nicer than the short right now. Even though the short could be looking like a good continuation to the downside, I wouldn't fall into that trap based on the overall structure to the left. So if you pattern separate that, you've had your completion of structure. Now we're in a phase 1, phase 2, phase 3 to the upside. There's no need for us to be jumping on that. Yes, Oscar, thank you, Oscar, my guy. So yeah, really happy with the overall trade thesis there. Euro USD though, let's see how that's doing. So yeah, so I'm still in that Euro USD trade. This one, again, I think it's one of them ones now where it's a lot of it is DXY dependent. So I will be waiting patiently. The nice thing is we have cleared this area here. If I go down to the 5 minute, just for refinement purposes, we've cleared that area there. So in terms of a sort of continuation failure, as we were just looking at, in order for this to really have just shown that, you know, we were invalidated by whatever, this would have had to then have committed, but we didn't get that commitment. We actually failed in this area here. You can see very clearly where price tapped into liquidity, near missed, actually did what it needed to do, but it failed to create continuation. At that point there, that's a strong signal that we are moving to the upside. So in terms of management and things like that, this is where you would really just kind of not be too aggressive with your management. You'd understand that anywhere below there, you'd be quite well protected because that's where price failed to continue. That is where predominantly the volume is sitting, and coincidentally with the retest of this. So for those reasons, you know, I think this is just going to keep going. It's going to come up, it's going to retest that, and then it will just slowly make its way back up, probably retest this section here, and then eventually it'll be up here, and then we'll just have to wait and see how price reacts. We can already see how the nature is responding and moving, so it's not looking like it's going to be a difficult trade to trade. It's going to be pretty impulsive, just going to have some swings back down like this, and then retest. So we'll just have to wait for those patiently, where it comes up, swings back down, comes back up, swings back down, comes back up. But you can see how it's continuously moving to the upside. So yeah, that's basically how we're moving on it. So it was a pretty short one today. I thought I would just make a quick video really to kind of share with you guys. Do you guys have any questions? Is there anything you guys are looking? You took AN. Got a question on AN. Let's have a little look at your AN trade. So Aussie New Zealand right here. Interesting. So you took AN long on the hourly. Ooh. Okay, that's interesting. I do kind of like this, to be honest. This looks good. I like the fact that no, I don't have Aussie New Zealand on watch actually. I didn't want to really have it on watch based on just the overall comparison to what else I had. So I was kind of just like, you know what, if I was to take AN, it would really be at a time where there isn't really much else that I could have really looked at. I'm not a huge fan of AN because, you know, for many reasons. Actually, I'll tell you right now. If I scale this up, let's just say, you know, you've got this as one large piece of its own. This looks a bit like a running channel as well. So it's kind of just, it's a bit messy in the sense of where it is. You can kind of see it for what it is. This is not even your proportioned flag as well, but I think more in the sense of scrap this being a running channel now. It's basically broken out of whatever this was. It's broken out. And I'll move this up. And now we're basically just trading into the next port of call. These areas right here. And you're basically looking for continuation into each point, but making sure it's manageable. So if you had something like that, even something above this, you can then take those to the upside. I'm not a fan of this, I'll tell you why, but I definitely see the benefits of being in a long opposed to a short right now, because the overall trend is on the long. You've had this huge amount of accumulation right here. All this accumulation, if it's ready to go, we're probably looking at how it started. We're going to be moving impulsively. So taking a long is definitely a smarter decision because you're taking advantage of the impulsive leg now. You know, as you can see, just as an example, for a lot of people who don't know what I'm talking about here, is what the trade idea is. You've had the accumulation here, and basically you're getting involved somewhere here, and then you're taking advantage of the move. Obviously this time it moved quite correctively, but in many cases it moves like this, right? And I think that's what we're seeing over here. So I think that's a really good trade. It's a good trade in the sense of you've taken it very strategically, and the market has now confirmed in a very nice way that we are in the impulsive leg to the upside. So for that reason, I think it's a good trade. So if you're running for, we're into elections in a few days. Come, yeah, man. Everyone vote for Oscar to become a president of Tanzania. Free the giraffes, free the zebras. Anybody from Kenya. In fact, you know, fun fact, my mum was born in Kenya. Yeah, Nairobi to be exact. How about you, Sean? Whereabouts in Kenya are you from? Aussie yen. Do you know what? Aussie yen is one of those pairs where when it shapes up, and it is a good instrument, honestly. Beautiful trade there. You know what I like? I like the fact that sometimes you get these really clean flags and then they just commit. You know, even though a lot of the time you do get clean flags, but especially on an Aussie pair, because usually I expect something like this on an Aussie pair, where you basically get like your first touch, it comes down, comes up, creates second high, comes down, comes 50%, and then just sells. That's like a very common Aussie trait for me that I've noticed. But here, this was solid. This was 10 out of 10 really. I really like that. I'm in Nakuru City. That just sounds so cool, you know, Nakuru. I watch too much anime. Nakuru. They need some more African animes, you know. Let's see. What else do we have? Aussie US dollar. Indices though. Anyone trading any indices this week? I'm looking at quite a few options. They're very bullish at the moment as well, so it's a very tricky one to get involved in, because when it's in all-time high bullish territory, you know, you can always expect some level of a pullback on it, so it's tricky in that sense. UK 100, HK 50, CN 50, EU 50. I'm not really seeing much price action that I can really play with, to be honest. France 40, to be honest, playing it into the high, this one right here, could be a play. It's just you're all the way up here now, so it could be an interesting play if it comes back down before it goes back up. If we get something like this, so this is the 4 hour, I would wait for it. I would wait for something like this. Come back down, comes in here, wash out, comes back up, insurance entry, and then it just makes its way higher. And then you've basically got this flag, you've got the gaps down here, you've got the insurance entry there, you've got entered in the market there, and then boom, you've played that trade. And then with a risk reward, arguably, you probably, with the washout in place, if there's a washout, you could go refined, maybe even with 25, because I'm not too sure about the spreads, but 25 is pretty good. If there was no washout and it was subjectively there, I would probably try get away with around about 40, or just maybe even a reduced risk entry, something to just really mitigate a lot of the risk in this area. But a washout would be perfect. Getting involved there with a washout, you know, you could probably get in with, call it 20 pips, still playing a 5 to 1 to the upside. I really like that. France 40, but again, you've got much better pairs on watch, man. I think the commodities, as you were looking at gold and silver, they've got more potential. I think a lot of people now will be a bit too zoomed in on gold, and they'll be thinking, oh my god, it's going to be selling, it's going to be selling. This is where the earlier people are going to get trapped out. The early people are going to get trapped out completely in these areas here, right? Just wait for price. When price does this, it'll push up, come back down. It will just mess about in these areas for a bit, and then eventually it'll get here, and then it'll push back up, and then it will sell off maybe. We just have to wait for that, but that will probably be your best gameplay for gold, really and truly. Is just wait for it to do what it needs to do. It could take another day, it could even take 2 days, but then, you know, open London, New York session, most likely we're going to be looking at it at a time where people will not really be sharp, and I would say probably like a New York Asian session period is probably going to be a solid time. I think Asian session sell-off would be solid for gold, because a lot of people will miss that trade, and it would be a great shift in the market, where previously we could see it here, where if we look at the price above over here, that sold off. The start of it was roughly in New York session, then it came London session, and it just began. So the signal was kind of really between Asian session into London session, and then London, New York, it just committed. So again, we could see something similar. There's going to be multiple opportunities to get involved. Even if you don't get involved at the top, I'm almost certain you could even get involved on the 4 hour, and then you could get involved on some level of a refined, 15-minute. A 1 hour is probably not going to be as easy to catch, because if it's impulsive, you're not going to see any 1 hour structures. You might just see an impulsive 4 hour and then 15-minute flag within it, 4 hour, 15-minute flag, and it just commits. And I wouldn't be surprised if you see something like that, because the more gold stays in this territory, the more unlikely it is what we think it is. So what we would want to likely see is the completion of a structure and then the follow through commitment. And if it stalls and it's coming down correctively, those are signs that you need to be extra cautious with your trade. The exact same thought process applies for silver. But silver might come sooner than gold, but they're likely going to commit together. So I said this yesterday, personally I prefer gold over silver, but in terms of like just the overall picture, silver does look better. It's just you have to compromise with better protection. And that's the thing, it comes between two sides. If you're considerably up in profit and you can afford to take 2 trades on this and be wrong twice, then it's not really a bad trade. I would go for silver. But if you want to be on the more low risk side of things and you want to keep yourself protected and you want to mitigate against all case scenarios, you then want to put your stop loss above here as a minimum criteria above that ray line, that retest. And then as an even more safer situation, you might want to add a little bit more to that. But then, risk reward wise, you don't really have a huge risk reward. So that's the lower risk, sort of protecting the account side of things. In terms of the more aggressive play, you take the trade here, it comes back up, you took the trade in here, you call it 60 pips, you got about roughly 2.5 to 1 to the bottom of this flag. Then it just follows through for 5 and so forth, and then becomes a bigger trade. In the case that you get taken out on this trade, so it comes down here, then it comes back up, takes you out, and then comes back in, you either get a trade here, and then you get positioned, exact same thought process, just manage it accordingly, 3 to 1 to the low, and so forth. And then in the case that that fails, and then it just develops, and then kind of comes up here, and retest all of this, and then it has like some sort of, whatever happening in here, and then you get a sell in there, you just have to wait for it. That would be an insurance entry situation, because it's basically just come up, did all of that. You could, again, after them 2 losses, you might want to chase it here, and then that could end up in a loss. But again, you got 3 to 1 to the low there, and then over here, this would be your re-entry, but on the lower risk side of things, because it's come back down. So then you would have been able to enter here, and then again you would have roughly about 2 to 1 to the low, and so forth. But again, you can see all these scenarios, how price can just evolve against you. It can get messy, and then it may not even be the one in some scenarios. It could just come down, and then next thing you know, it's just coming back up here, and then it double tops up here. So I would say just find ways to mitigate risk as much as possible. On the lookout for an EJ short. Let's have a little look. So this will be the last one, because I've got to shoot off, as I've got some guests coming over to the house. I need to just make sure that I'm set and ready for it. So EJ short, nothing wrong with that. You're in a value area, but you just need to be patient. These are the areas where a lot of people lose themselves, and they start zooming in, they start trying to catch any little thing in those areas. This is where a lot of people lose money. From a perspective of higher time frame to lower time frame, okay, we can start from the 4, because we're at a 4-hour value area, so that's fine. We can see here, and I already know the bigger picture. We come here, we've had a sign of a rejection. This is the first sign of rejection. It looks good, but we don't know how good it is until we get a follow through. So now let's go to the 1 hour. On the 1 hour, we did have signs of continuation, and we have a sign of a potential failed continuation here. So this could have easily come back up here, done this, but it didn't do that. It's now broken that floor, and we're trading below it. So that's a good sign for shorts. In terms of where we're positioned, it's not the best because of that. And you might be asking, but what is that? That's just a random point. What about the next point? What about the next one? What about this one? What about this one? Well, yeah, sure, they're all points, but you have to kind of see that that is the origin of this move. So as a key point that you have to come to the realization with is, if you're responding from this as a base now, this is not a place where you want to wait for, even in the most perfect scenario, you don't want to be waiting for, you know, something like that, because even that is not confirmed. Even though that has a 3 touch, that's higher risk. It's much higher risk. So again, it's situational. A better trade would be, let it do whatever it needs to do here, let it follow through and give you a next trade here. A trade like that is the one that you want to be waiting for. That's better because that's cleared this, it's got a clear run to that point, you can manage it from A to B, great. In the case where we are now, you can't manage it into where you already are. If you were here, if you had the follow through here and you got the flag, you'd have to be able to manage it into that point there. And then after that, you'd then be able to manage it into this point here. You see where we are now? We don't have that, right? You can't manage into a place you've already tapped into, or you're already sitting on that area. See, this is the flag here. What am I trying to manage it into? What if this now develops and comes back up, and then it comes back down, and it does that, and then you're kind of like, oh, I took an unnecessary loss. I should have seen that it wasn't what I thought it was. So keep that in mind. Like that could save your loss right there alone. It's something that, because you're high up in structure, I can see why you'd be so keen to want to get involved. But this is where a lot of the traps are, and it's those small clues that will save you from losses. So bear that in mind, that this is a good sign, but all it is a sign right now. It's nothing more than a sign. Once we start clearing that and we start creating more continuation and we start following through and we get another continuation, that's you getting more confirmation with all of this that price is moving. And then you can understand, how is price moving? Is price moving correctively, or is price moving impulsively? And then you can pivot your strategy to how you want to be dealing with those market conditions. Do you want to be getting in a little bit more aggressive? Do you want to manage it a little bit more loose because it's a little bit corrective? Do you want to be adding additional stop protection? Do you want to take it with lower risk? These are the sort of questions you really want to be entertaining. But kind of just going off this, look, I'm not saying that this trade is wrong, right? This trade could completely play out, right? And I'm just saying that you need to be conscious of, you know, this little point here. This is the line in the sand, and it's no surprise that we have made a response there. And then from that, the next point is down here. This one is nothing. This is not even an origin of something really. It was the beginning of this, but truly the beginning of all of that was here. This was the push up, and then the next point was down there. So really and truly, if we follow through from here and we get a small continuation there, take that trade. That trade is a lot better than this trade here. Okay, this one is considered high risk, or I'll say very high risk. And then this one is lower high risk, right? And then anything below pretty much here, I would say that is low risk, right? Considering you didn't get this and it just impulsed and came straight into a flag here, right? So the very high risk one is above the low. The low risk one would be through the low after, as a small consolidation after this small flag. The reason why the third one becomes low risk is because when you kind of look at it like this, it's out of that. It's out of that channel. Within here, it's kind of still within this channel. So there's still the element of risk on the table here, because we could still be pushing up higher. No worries, Oscar. It was a pleasure having you on. And yeah, so yeah, pretty happy with that overall trade thesis. Got to shoot now anyway, guys. So it was lovely doing this episode today as well. I'll catch you guys in the next one. Take care.